Welcome back to Vantage. We are keeping our focus on the emerging markets. We have a household name that is known for investing in emerging markets. A fascinating journey, 30 years of knowledge. Let's go take a look. Welcome to Vantage. We're keeping our focus on the emerging markets. I'm delighted to have the manager of Templeton Emerging Markets Investment Trust with me. Templeton, a household name in emerging markets, known both for its investing over here, but also as an investor in the emerging markets. Chetan, welcome to Vantage. First time, I think. Tell me a little bit about the trust and then get into your own background.
Thank you for having me. Always a pleasure. So, the trust itself, TEMIT, Templeton Emerging Markets Trust.
Yeah.
And that is one of the longest listed trusts in the UK market.
Yeah.
Over $2 billion in assets.
Yeah.
And it's been there for over 30 years. So it's had a track record of outperforming index over all the time periods, 1, 3, 5, 7 years, 10 years. And the reason why it has done so well is that we stuck to our philosophy. And our philosophy is about buying companies with a sustainable earning power at a discount. And I've been with the company for over 30 years, managing the trust for the last 10 years. And I think it's just the implementation of philosophy which has resulted in superior returns.
Okay. And what are the benefits of actually working at Franklin Templeton in terms of actually deploying that kind of investment approach?
Yeah, I think when we started off, emerging markets were all disparate asset classes, and I was fortunate to have a boss who was traveling all these markets and visiting all these markets, and he had hired me. So you must remember it started at a time when there was no internet.
Yeah.
and things were done on fax, and you needed physical visits and all. And luckily we have that legacy. We have all that information in our databases. We have all these engagements with companies over a 30-year period sitting with us, and we are a household name in most markets. So what it does is it gives us access to a lot of company managements. It gives us an understanding of the history of these companies.
Yeah.
And we have a large analyst pool in various local markets because we've stuck to the fact that to understand emerging markets best, you need to have local talent in local markets because they are the guys who understand the companies the best, as well as they are the guys who can initiate change on your behalf.
Okay. So when an investor looks at the emerging markets, what do they offer a global investor? But particularly in today's year, the year that we've had today, which is been tariffs, quite a lot of focus, volatility. What's the advantage of emerging markets?
Yeah, so emerging markets, a large part of the global economy, so one needs to have some exposure to emerging markets because, number one, the kind of breadth and depth they offer, the kind of companies now which are there in the markets, because, previously one could argue that emerging markets had, more state-owned enterprises, were far more limited, but over a period of time, we've seen the rise of very competent companies out of emerging markets.
Yeah.
If you talk about the best semiconductor companies in the world, they are coming out of emerging markets. And we've seen breakthroughs of emerging market companies in many sectors which were previously dominated by the West.
Okay. And for someone who's looking at the trust, what are the sort of key features of the trust that appeal to an investor or an investor should know about?
Yeah, so the trust offers many advantages. Number one, that it has scale and size and liquidity, so people can actually purchase the trust. Second is, we can also do unlisted investments, which is not possible in an open-ended fund because of the very nature. We have gearing, which we can leverage up if we are more wanting to be more invested in the market. So those are the benefits, and then there's the corporate governance angle of the board, which controls, which manages the trust. So the board can do a buyback of shares, which it is currently doing.
Yeah.
The trust also pays out a dividend, which many income investors want. So there are a lot of advantages of a trust over just an open-ended vehicle.
Okay. And when you're looking at the portfolio today, roughly how many companies are in the portfolio? And then can you walk us through the positive and negative biases that sort of sit in the portfolio, both in terms of exposure to sectors and geographies?
Yeah, so we say we are active and we have a high concentration in our top holdings, but we have an exposure to over 80 names.
Okay.
And we cover many more companies. The Templeton Emerging Markets Group has more than 70 investment professionals, 35 dedicated on research. So we cover many more companies, and out of that we have around 85 names. The number of names in the market is more than 3,000. So there's a large number of companies to choose from, and we research nearly 700 names. So as I said previously, our emphasis is buying companies with a sustainable earning power.
Yeah.
And that makes a shortlist of its own. And we've seen a lot of sustainable earning power in companies in the semiconductor space, in the electronic space. So for example, our largest holding is a company called TSMC, which is now becoming a household name, but we've been owning it for the last more than a decade.
Okay.
And that company makes chips for all the consumer electronic devices which you guys use, like the phone or the AI servers as well. So that's a large one. So electronics is where we see companies with a lot of sustainable advantages. We've also started seeing the rise of the companies within emerging markets in other sectors as well. So, for example, we own Tencent, which is a game company, which is based out of China, which has got 25% global market share in games, and it's one of the dominant companies in that sector. They also have a large access to their own local market. So that's a big advantage that company has. Then we have exposure to banks. Banks are a good way to play the local economies because, unlike things, manufacturing goods which can get tariffed, banks are basically focused on the local economy. And historically, the banks in emerging markets have outperformed the local emerging market index. And this is despite the fact that emerging markets used to go through periods of crisis and banking crisis. So when people used to talk about emerging markets, they used to say a crisis could appear anytime. But despite all that, the banking sector in the emerging markets is very resilient. So we have exposure there as well. Where we've been underweight is things like utilities, things like real estate. Those are the sectors we've been typically underexposed. And we have lower exposure to the energy sector, where we had a long time belief that with the innovation taking place and solar sector coming up, the price of electricity, no matter the demand increase which is happening from AI, but the price of electricity over a period of time would go down. And that's really what is playing out in the portfolio as well.
Okay. And any country biases? Are you particularly exposed to any country or
it is a result of our philosophy, and unfortunately, one of the markets which everybody is most optimistic about, and I am an Indian myself, has been India. And we've been underweight India because of the fact that we stick to our valuation discipline and we want to discount. Earlier this year, when the market did correct, we did increase our position in the Indian market. So that's one place. The other place where we are underweight is China. China has faced many issues. It's a very, very strong manufacturing economy. There, the real challenge is about, there is a challenge of demographics and on China and trade tensions, etc. But I think one of the fundamental changes which China requires is better corporate governance. So we are looking for opportunities in that market, but we are very careful about choosing the right companies with the right governance. So those are the two places where we are most underweight. The overweight markets are Korea, which has been a wind of change recently. I must say, we've been overweight for a long period of time. We've always had the faith in that market, and we are working with a lot of companies to initiate change. The TEMIT Trust has been successful in many of them. So there are many examples of success of change in companies in Korea. But now it's become a national agenda. So it's very, very different from lone wolf fighting the system. It's now a national agenda, and that's a big positive for us. Korea has done very well. And the other market where we are optimistic and highly weighted is Brazil. Notwithstanding the recent tariff imposition, we have more exposure to the banks. That's where we are weighted. We have a pharmaceutical company, cancer care company, some software, etc. So not so exposed to tariff. It's a local economy. The real rates are quite high. Banks are making a lot of money on in that business. So by and large, I think these are the two overweight markets, and I just talked about underweight markets as well.
Okay, perfect. And I mean, you mentioned earlier TMC and Tencent. And to be honest, these are brand names now that are well known, within the sort of Western hemisphere. Most people have heard of these companies. But when you're looking at things like Korea or Brazil, give me an example of a company that, and just to illustrate your investment approach, the appeal of the company, what makes it interesting that someone might not have heard of.
Yeah, so I think that one of the investments which I'm most proud of is a small company called Liga Chem, which basically was named Lego Chem, but they lost the case against Lego, and they had to change their name. So it's a company which builds a platform for antibody drug conjugates, which are used for cancer. And it's very interesting because these are a name which not many people would have heard of, and when we invested, not many investors are also aware of. And this company had won a lot of awards in antibody drug conjugate development, and we invested at a very early stage in that company, and it's done very well since then. And now a lot of their drugs are getting out licensed by multinationals. But it's been a 5-year journey, And what makes us particularly proud of that, owning that name, is at least, we may not have eventually made money, or we made money in this case, but at least you would have attempted to try to solve cancer, right?
Yeah, no, it's always good to see the investments doing some good. I mean, you talked about, this trust has outperformed over a number of sort of different sort of time periods. But there's this sort of sense of there's a sustained period of outperformance since mid-2022. What's your sense of what is driving that? Is this a macro factor, or is it really the bottom-up approach that you're taking?
So it's always been a bottom-up approach. I think 2022 we were slightly unlucky. The Russia invasion happened, and prior to one day before, we didn't think it would happen. And the trust was invested, and we had to write off a lot of the assets. So that impacted us that year. And the second thing happened in that very year was the fact that China had a crackdown on the internet companies, and being long-term oriented, took time to understand the implications of that. So I think that year was a tough year, but we have since recovered. As you see, even on a 1, 3, 5-year basis, we've actually come back. Our philosophy has remained the same. We've always tried to invest in things which we think have sustainable earning power. I think it works, but the real debate is whether the companies which you own have sustainable earning power or not.
Yeah, of course.
And that got tested in the Chinese crackdown in 2022.
Okay, I feel very privileged. I feel like I've just immersed myself in 30 years worth of wisdom on the emerging markets. It's been a fantastic run through of your approach, the history that you've had in the market, the kind of companies that you're looking at, and it's definitely something that I think our viewers should focus on and continue following. Thank you so much for coming on Vantage, and I hope in next time you're here, etc., you pay us another visit.
Thank you very much. Thank you for having me.